What I want to talk about in this video is how during a market crash, your cash value inside of your life insurance policy stays protected from market loss. Regardless of how much the market goes down, doesn't matter. The money, the cash value in your policy will not drop because of that. Whether it's crypto, stock market, real estate, doesn't matter. Your policy has nothing to do with the markets. Now, let me clear that up. I'm specifically talking about a whole life insurance policy. Okay. So, for example, let's say you have $100,000 invested into the S&P 500, just to keep it simple, and the S&P crashes 30%. So a whopping 30% it plummets. Now your 100K, let me go over here. Now your $100,000, your 100K turned into $70,000. You just lost 30% of it. If I had $100,000, 100K, $100,000 in my whole life insurance policy in my cash value, what would happen to that money if the market crashed 30%? Well, the answer to that would be my money would continue to grow. I wouldn't lose any money in that scenario. Now, depending on the policy you have, the carrier you're with, you'll be earning anywhere from a 3 to a 4% guarantee on that money. So what that means is the money in your cash value, regardless of what happens in the markets, 'cause it has nothing to do with the markets, is completely separated. No matter what's going on there, your cash value is going to continue to grow by 3 to 4%. Now, if you're with a mutual carrier, you'll receive a dividend on top of that. But on a contractual guaranteed basis, you're going to earn, no matter what happens, you're going to earn 3 to 4% on your money. So, this is a powerful tool to protect your money. If you have money that you're not wanting to take a boatload of risk with, then that's where positioning it with a whole life insurance policy could potentially help. Okay. Now, the key is to not mix the two. And I see this all the time is trying to compare the growth of a whole life insurance policy to the growth of the stock market. They're two completely separate things. One's an investment, one's insurance. One you can lose money, one you cannot lose money to market loss, especially if it's set up the right way. If it's set up the right way, you're only going to earn money. You're not going to lose any money. You're only going to earn money. It's going to continue to grow. Okay. So that's what I wanted to really discuss in this video is you don't lose money in a whole life insurance policy due to market crashes. Okay. Let me know if this video helped. If you do have any questions, leave them in the comments below. I'd be happy to get back to you there. If not, make sure you leave a like, subscribe, and I'll catch you in the next video.